Welcome to another video. Today, what we will be doing is performing a live analysis in the market. So we will be taking a pair, analyzing it both from a technical and order flow perspective. And by using the combination of these two different types of analysis, we will understand the best zone that we can be looking for a potential trading opportunity on the specific pair. And as usual, I will try to keep the analysis as educational as possible so that you will understand exactly which are the best things that you have to look for when you are developing a trading strategy. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms every single day. So that you don't miss out on new free education, I really suggest that you subscribe, and I will see you in the video. Today, I want to give a full breakdown of the situation that we currently have on USDJPY because it's a very interesting pair to follow for a potential trading opportunity. So by the end of the video, you will know exactly what kind of opportunity we can be looking at on USDJPY, and I will keep the analysis very educational. So let's start from the monthly time frame, because first of all, we will be speaking about the monthly, weekly, and daily time frames from a directional perspective, obviously combined with what we have from a COT point of view, so the commitment of traders, which is what the biggest banks and institutions are currently doing in the market. And then we will go down on the 4-hour time frame to see what kind of entry we can be taking on the pair. So let's start from the monthly time frame. Now on the monthly, clearly what we can see is that the market has approached an extremely strong level of structure. In fact, this level here was acting as very strong support here, preceding all this move to the upside, again acting as support here, preceding all this move to the upside, again acting as support here, preceding this move to the upside. And with the last touch of the zone, we definitely expected again a reaction to the area and for the market to actually make this move to the upside. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can clearly see that the market from here has created this move to the upside, which is the rejection that we have already seen on the monthly. Specifically, it's very important to realize that currently the market is testing a strong level of structure resistance from a weekly perspective. In fact, before creating all this move to the downside, where is the last time that the market went to the upside? The last time that the market went to the upside before making this move to the downside is this green candle, which is exactly the previous support, which is now turned resistance at this area. And from here, we expect the market at least to try to give a short-term reaction to the area with a rejection to the downside. Going down on the daily, what we can see. Now, from a daily perspective, the situation is quite clear. In fact, on a daily, we can see that the market has, first of all, created a fake breakout of the monthly support, which we have currently identified with this green box, then broke back above the support, retested it here, and rejected everything to the upside, which is exactly what you expect in general after a fake breakout. Why? Because if you have a level of structure, okay, horizontal structure in the market, and the market respected this zone in the past as support, so it was respecting this area as support, bouncing away from it. If you see a break to the downside and then the market breaks back above, at that point, what you expect from the market is to see the market give you a retest of the structure before the continuation to the upside. That is basically what you expect from the market after a fake breakout, is a last test of the zone before the explosion to the upside, which is basically exactly what the market did here. So fake breakout to the downside, break back above, retest, and explosion to the upside. And in creating this move, the market has also made this W formation. Now, in general, if you have a W formation in the market, what do you expect? You expect the market, after creating a W formation, to give you a retracement back down to the neckline of the formation, which is basically the previous resistance now turned support in the market. And why is the W formation a very efficient pattern in the market? Because it is basically one of the best ways in which market makers like to manipulate retail traders. Why? Because basically they create a move to the downside, a retracement, then the market starts going to the downside, everybody starts to short, and they put all their stop losses above this high. And when I say everybody, I mean retail traders. At that point, all retail traders start shorting, so institutions can buy, and they hunt all the stop losses that are above this high. So they basically use the liquidity of all those stop losses to actually trigger their orders. And at that point, from here, usually what happens is that the market completes the pattern at the neckline. That is why we expect a retracement on USDJPY to actually complete the pattern, because on the daily, we have a W formation, which is a bearish pattern, and on the weekly, we have already identified this blue box as the resistance on the weekly. So we have a bearish daily pattern, which is testing a weekly resistance level, from which we definitely expect a move to the downside. Specifically, if this daily candle here will close with this shape, this is the candle that the next one is supposed to fill in the wick. I also made a YouTube video only about this pattern, so we can definitely expect the next candle to actually fill in this wick. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next video. Now, before I show you how we will be approaching this situation with students, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what the biggest banks and institutions are currently doing on the JPY. Specifically, why do we only have to check the JPY if we actually want to check USDJPY? Now, you have to keep in mind that all currencies on the spot are traded against the USD. So if you check the COT data for the JPY, you are actually already checking JPY USD. And if you want informations on USDJPY, you simply have to reverse everything. And what we can see, now if we look at the net positions, we can see that we went from 18K net positions all the way up to 31K net positions, meaning that the disparity between the longs and the shorts is actually increasing to the long side. In fact, when we had 18K net positions, we had 45K longs and 26K shorts, and now we have 52K longs and 20K shorts on JPY USD. But as we were saying, we want informations on USDJPY, so we have to reverse everything, meaning that during this move to the upside, institutions have already started to add some shorts on USDJPY because they're adding longs on JPY USD, meaning that from here we can definitely expect the completion of this W formation. Now, there's one very important thing to say, because as usual, just because you want to see the market give you a move to the downside won't mean that the market will just make the move to the downside. It doesn't mean that you can just take a short. That is not how trading works. Trading is reactive, it is not predictive, and you need to have a clear system in place when it comes to executing trades to actually be consistently profitable in the long term. So how do we do this? Now, with students, we take our directions from the monthly, weekly, and daily timeframes, which gives us the bigger picture of the market. And then we also check the COT data to see if our directional aspect of the market is backed up by what institutions are doing in the market. And then we go to execute our trades on the 4-hour time frame, because that is the time frame that gives us the possibility to be more precise and have a minimum 1 to 3 risk to reward when we are actually executing our trades. And if we go down on the 4 hours, what we can see? On the 4 hours, we can see that everything is still bullish on USDJPY. The market is just continuing to have a quite strong bullish momentum without any sign of weakness. So obviously we can't be looking for the short yet. And if everything will remain as it is right now, this candle might even close green. So we still don't have any confirmations for a short. But this doesn't mean that the situation that we have on the 4 hour can't change in the future. So that is exactly what we are looking forward to and what we will be waiting. In fact, all inside of this area, what we will be doing with students is monitoring price action from a 4-hour perspective, waiting for the market to shift from a bullish market as we have right now to a bearish market. And if the market will actually shift from a bullish to a bearish market, at that point, we will add USDJPY to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this W formation at the neckline, aka the previous resistance, which is now turned support at this area. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, you get a new daily market breakdown every day showing you exactly how to apply the strategies with entry, stop, and take profit, as well as having me personally answering every question that you have every single day, including the weekends. So it's a very complete program. I really suggest that you go and check it out. You'll find it linked in description, and I will see you in